It's getting worse and worse, the growth outlook of S&P that is, and Danny has the latest on that downgrade. So why the slash this time around?
Well, you know what? This is actually related to how they have already downgraded the forecast earlier on in this year. So just to share with you the figures here first before we dive into that. Their current projection of our GDP growth for 2019 is now at 6.1%.
Okay.
That's actually the lowest, range, close to the low end of the range of the target of the government. That's from a previous 6.5% that they had on April 3. So that's a pretty hefty jump there, Jess. And also slashing next year's forecast to 6.4% from a previous 6.5%. Nevertheless, still forward-looking, they're keeping the faith on 2021, 2022 to reach 6.6% and 6.7% respectively. Now, they did also say that this was amid the fact that the 4-month budget delay has already been resolved. So that's already taking into consideration the fact that the government will be catching up on the spending. And they also, raised their rating on the credit outlook of the Philippines, meaning we can actually pay our debts there to BBB+, and that was very positive for us. But they are still saying that there are a lot of risks here, the bigger than expected effects of the US-China trade wars, especially on our electronics manufacturing sector. So they pointed that out. And also, even with the benign inflation, they are still saying there's still risks like external financing, exchange rate volatility, and a possible resurgence in inflation there, Jess. So, not very good news here. Let's see how markets will be reacting to that 6.1% softer growth outlook for this year.
Definitely, we can expect the index to react to that set of news, plus these other downgrade that we have to be keeping an eye on, this time on the year-end levels of the PSEI. So tell us more about that, Dan.
Okay, so HSBC this time recasting its PSEI forecast to 8,600 by the year end. That instead of 8,720, which they used to have as a previous forecast. They did mention the tight liquidity in the financial system. But nevertheless, this is still pretty high. I mean, we're still, right close to 8,000 right now. So still quite a lot of upside there at 8,600. This is even one of the higher, let's say, calls from several analysts. And they do cite a lot of silver linings. They are still overweight on Philippine stocks. They did say that there's going to be a positive macro environment, particularly strong earnings growth and a multiples re-rating there. So they did mention that they're looking at earnings growth for 2019 at 13.2%, and also that their downside risks of growth is actually limited because the risks are spread across different stocks and different sectors. They also said it's attractive valuations right now, particularly for the MSCI Philippines index there. So they also mentioned that all of these issues might be, the trade war issues rather, might not be spilling over as badly as expected because we're still a domestically driven economy there. And they're also expecting, as other analysts are, the BSP to continue on its easing path and for them to be cutting 25 basis points further this year and also reducing the RRR by another 100 basis points. Now, meanwhile, just taking a look at how we closed yesterday, and not very good. Actually, we slumped 0.3%, but that was also largely across the board.
Okay.
US had been in the red prior to that, and also Asia a little bit mixed. There are several in the red also, and it did also during intraday actually touch 7,983. So we did slump below 8,000, but we still managed to close at 8,013.57 there. So analysts are saying this on the back of continued trade war jitters. We're still awaiting the G20 meeting between Trump and Xi. That's going to be tomorrow. So markets still on the edge right now, and net foreign outflows continuing. That was at 573 million pesos. So if you take a look at your sectors here, a pretty mixed picture there. You're going to be seeing properties recovering a touch after being sold off the day prior, but you're going to be seeing holding firms dragging down our local bourse that was down by 0.6% yesterday, Jess.
Okay, let's see how the markets will perform, especially since you have a lot of news strands here that we have to be reacting to, at least the investors will be reacting to.